In addition to being an inflation hedge, higher crop prices are contributing to rising farmland values, plus a transfer in wealth. Families inheriting the land and choosing to sell it because they no longer live on the farm. They've moved to the city. Average price per acre for farm real estate, $3,800. That's the highest on record in this nation, up 12.4% year over year, according to the Department of Agriculture, with values in Iowa, Illinois above $8,000 an acre. Interest expanding to the Pacific Northwest as well, and that's attracting new investors.
But what we're seeing is new buyers, new entrants into the market that have historically not been in the farmland asset class. And they're coming in with cash, pulling it out of equities and other places. And they're looking at this as an inflation hedge.
The Mormon Church, Bill Gates' family office, to private equity firms like Sixth Street Capital. They're among the investors buying the land, in most cases leasing it out to farmers. There's two real estate investment trusts with exposure. That's Farmland Partners and Gladstone. You can see they've outperformed over the past 3 years. Experts, including Bruce Sherrick, he's the University of Illinois professor, he says one of the big risks and opportunities is going to be China. Right now, 1/5 of our agriculture exports go to China. That's about $38 billion a year. If the economy slows down, that could bring crop prices and farmland down with it. Brian?
All right. Seema Modi, thank you very much. Appreciate it. So exactly how do you invest in farmland? I mean, I guess you just buy a farm. Maybe it's not that easy. Let's ask Martin Davies. He is global head of Nuveen Natural Capital. So if I believe Seema's report, and of course I do I just, start asking realtors for a couple acres in Iowa? How does this work?
Hi, Brian. Great to be here. So I think there's never been a better time to invest in farmland. Many different ways in which an investor can access the asset class. There are some exchange-traded vehicles. There's opportunities to invest in funds for qualified investors. There are new platforms online which investors can use. And of course, an investor can invest directly in farmland. But the one thing I would say is that if you want consistent returns there in farmland, you really have to diversify. So a vehicle in which you can get some diversification is critical to deliver consistent returns over time.
Okay, like what? How do we do it?
So if you have a diversified fund, you might have different crop types, different locations, different ways of operating the asset. So you might lease out row crop land and operate permanent crop land. So different return profiles give you complementary aspects, and that gives you the stability and resilience and very stable returns over the long term.
Yeah, so is it better to physically buy the land or no? It sounds like you're recommending financial instruments as the better way to do it.
No, the characteristics that you're really looking for, not being correlated with the economic cycle, the inflation hedge characteristics, and low volatility of returns and strong returns as well. Fundamentally, you need to actually have freehold ownership of the land. Instruments won't give you the same characteristics. So owning that farmland, core farmland, high quality, and that'll deliver consistent returns in the long term.
Is there a better crop? I mean, if I was going to, I believe what Martin's saying, I want to own farmland, what am I buying?
We try and diversify globally, so have investments in the US, but also in other locations, Australia, South America, Europe. We've got 46 different crop types growing across 2.2 million acres globally. And all those different crop types, you haven't got a correlation between the different returns in those crop types. And that's really what gives you the strength in the construction of the portfolio. So it always advocate for diversification. Agriculture is primary production, so we can't get away from weather risk, commodity price volatility, and government intervention and regulation as well is something that we have to deal with. So diversification is key.
What kind of returns can we expect?
A good proxy for returns, Brian, is the NACREIF, the US Farmland Index, which over a long period of time, the index goes back to 1990. So we've seen total returns of about 10% with the index. That's about 4% coming from appreciation and 6% coming from income. So you've got complementary returns and very stable over the long term.
Martin Davies, Nuveen Natural Capital. I love talking about it. It's something completely different. Martin, thank you very much. Have a great day.